I want to talk to you about something that maybe you've never heard about, and this is what we call a pre-closing purchase price allocation appraisal. That sounds like a mouthful, but for those of you that are tax wonks, meaning you're in the nitty-gritty, you're in the underwriting, you're trying to figure out how to save money, how to increase net operating income, how to distribute those profits back to your passive investors. The last few years have been really tough, right? They've been really tough to find deals that actually pencil out. They've been tough to find deals where you can get good insurance at a reasonable cost. And more importantly, there's been difficult time getting deals to actually pencil out where you theoretically could avoid getting hit with an increase in taxes, in property taxes at properties in commercial real estate when you're looking to acquire those properties. Well, one way in which many savvy, sophisticated sponsors, operators, and syndicators all across the country have been able to avoid not only the taxman increasing their property taxes at an acquisition, they've actually been able to lower their taxes, and they've been able to do so through what's called a pre-closing purchase price appraisal allocation. That's where you have a CPA firm or other dedicated tax professional essentially look and appraise the different components of the acquisition itself. So they take the real property and they get an appraisal just as to the real property. They take the tangible personal property and they allocate a portion of the purchase price to that part. And then they take the intangible property that you're acquiring in the acquisition and they ascertain and allocate a piece of the purchase price to that. Did you know that intangible assets are not taxable in 45 states? That means that there are at least 45 states out there in which you can potentially drive down the tax basis of the property that you're actually acquiring, and you do so through this purchase price allocation appraisal. If you want to learn more about this and whether this might be something that might be applicable for you in your next acquisition, give our firm a call. We would love to help you out, or at least give you a consultation to let you know if you're on the right track. We're trying to give you tidbits about how you can increase your net operating income, how you can decrease your expenses so that you can do more deal flow. If you're somebody that loves commercial real estate like we love commercial real estate, happy hunting.